And I want to recognize and thank Kentucky American Water for being our long-term presenting sponsor for this. And I'd like for Brent O'Neill with Kentucky American Water to come to the podium to present a few sponsor remarks. Brent.
Thanks, Bob. Good afternoon. It's always scary when an engineer comes up, but they wouldn't allow me to have flip charts or maps, so you're safe. Kentucky American is pleased to continue its support for this public policy luncheon series. The consistent, solid participation in these luncheons demonstrates the series is providing a terrific value to the Commerce Lexington members, and we are proud to be part of it. For those of you who don't know, Kentucky American is a regional water utility based here in Lexington with roots dating back to 1885 when 3 businessmen established the Lexington Water Works. Today we have about 140 employees and provide water service to customers in urban and rural portions of 13 counties and wastewater services to portions of 4 counties. We are a subsidiary of American Water, the largest and most geographically diverse U.S. water and wastewater utility. A significant portion of my engineering team's time is spent coordinating capital investments in water system assets, such as replacing aging water pipes, updating water treatment plants, refurbishing water tanks and pump stations. In fact, the company has invested more than $100 million in the water system infrastructure projects in the last few years. These investments are necessary to maintain and enhance service, water quality, system reliability, and fire protection capabilities for the many communities that we serve in Kentucky. And my team, just like the rest of our employees with the Kentucky American, is proud of the work that we do to make sure that the quality water keeps flowing to our customers. Congressman Barr, we thank you for your service for the 6th District. I appreciate you being with us today, and we look forward to your comments.
We're going to have a special presentation here. We're going to have Ben Taylor, who's Executive Director of the Great Lakes Region for the U.S. Chamber of Commerce Congressional and Public Relations Group, to come up to make a special presentation.
Without further ado, please join me in welcoming Congressman Andy Barr, and again, a recipient of the U.S. Chamber's Spirit of Enterprise Award for 2018.
Thank you, sir. Thank you, Ben. I appreciate it.
Thank you, Ben. And that is not why I voted for the tax credit, but it helps certainly with Eleanor and Mary Clay, my 8- and 6-year-old, and hope it did for those of you who are parents as well. Thank you very, very much, Brent, for Kentucky American Water and your sponsorship of today's public policy luncheon. Thanks, as always, to Commerce Lexington for hosting. Bob and your team, we really appreciate it. And thanks so much for recognizing my new district director, Tatum Dale. Tatum is our new leader in our district office, especially when I'm away from the 6th District doing my job in Washington, D.C. But she's been with the office. You all probably know her. If you've had any interaction over the last 6 or 7 years with our office, Tatum has been a staple, and she's going to do a great job as our district director. And I also want to recognize Jody Whitaker, who is with me today, and Jody's our communications director. So thank you for the great work that you all do and your team on constituent service, which as you all know, we prioritize. Happy Flag Day. Today is Flag Day, and we are so grateful on Flag Day to have the proud military mother with us, our mayor. And we were just talking about your son. Thank you for your family's service to our country and the military. It's great to have you and your team with us, and we enjoy the partnership with you and the council. So thanks for being here. Flag Day is a great patriotic day, and this month, of course, in particular, we had a special opportunity to thank the veterans of D-Day. Several of my colleagues traveled over to Normandy, France to celebrate the 75th anniversary of D-Day. I stayed here in the district, and we were able to recognize Private First Class Alvin Perry, who came into the second wave at Omaha Beach and was out at Thompson Hood and Wilmore and was recognized by the Consul General of France with the highest honor that the French government may bestow on an individual, and that's the French Legion of Honor Award. And that was because 5 days, D-Day plus 5, he was shot by Germans, and he was taken into captivity and was there in a German prison camp until his liberation in May of 1945, and he is one of our own. He is a Central Kentuckian, born and lived his entire post-war life in Lawrenceburg, Kentucky. Which kind of it kind of dovetails into my new responsibility in this Congress, which is an assignment on the House Veterans Affairs Committee, and I'll talk a little bit about that. But this morning, what I was doing earlier today was really one of my favorite parts of this job, and that was our Academy send-off. This year, Central Kentucky, you can be proud that we are sending 8 patriotic, capable, talented young men and a very talented young woman to the U.S. Service Academies. That's the most that our office has had the privilege to send from our nominations committee. And all of the academies are represented. We have 1 Air Force Academy appointee. We have 4 to the U.S. Military Academy at West Point. We have 2 outstanding young people heading off to Annapolis for the Naval Academy. You've read about one of them, Anna Marie Gilligan. Her proud papa is in the audience here. And she was accepted into 3. She was accepted into West Point, Annapolis, and the Air Force Academy, and she's going to Annapolis. And then we have 1 going to the Merchant Marine Academy. So we're very proud of them. And as I told them this morning, you are the best and brightest. You are the best and brightest from this part of the country, and we need you because the national security challenges facing our country requires our best efforts. And I'll get into that a little bit later today. So what I thought I might do, and I know we want to get to questions and I want to entertain your questions as well, but let me touch on the state of the economy and our continued work on the House Financial Services Committee, in particular my new role in Congress as the ranking Republican on the Oversight and Investigation Subcommittee, trade negotiations, the tariffs, the status of the USMCA and China, the crisis at the border and our continued efforts to reform our broken immigration system, both from a border security perspective, the DACA problems, and also our broken guest worker programs and the labor supply challenges. And the fact that I, in this Congress, am now working on chairing a task force called the Republican Study Committee American Worker Task Force. And this is to address our workforce development challenges and our labor supply shortages. Briefly talk about the prospect of an infrastructure deal and our work in a bipartisan group trying to push that initiative forward. And finally, I'll conclude with touching on the Veterans Affairs Committee work. On the economy, largely because of tax cuts and deregulation from the last Congress and this administration, and as Ben was pointing out, because of our efforts to roll back some of the onerous provisions of the Dodd-Frank law in the last Congress to enhance access to credit for homeowners, entrepreneurs, and businesses, the economy is indeed strong, and it continues to grow. At the same time, we are now seeing it growing at a slightly slower rate, and there are headwinds that we are watching. Once again, I have the privilege of serving on the committee, which really has jurisdiction over large swaths of the economy and our financial system. And so we do have the opportunity and the responsibility to monitor economic developments. While I'm no longer the chairman of the Monetary Policy Subcommittee as we've moved into the minority, I continue to serve on the leadership team as the ranking Republican on the Oversight and Investigation Subcommittee, which I like a lot because I've served on that subcommittee before, and it does have overarching jurisdiction over all areas of our committee. This is the Capitalism Committee. I want to point that out. This is the Capitalism Committee, and with many new freshman members on the committee who boldly describe themselves as socialists, and for whatever reason, the new majority leadership put those individuals on our committee, I do feel that this is a very important responsibility, and it gives me great purpose being in the minority, serving on what I consider to be the Free Enterprise Committee. And while we are not winning the votes, I do believe that we are winning the debate over capitalism versus socialism, and we're making the case every day for the opportunity-producing power of free enterprise. So as we oversee the Federal Reserve, as we listen to the financial regulators at the Fed, at the Treasury Department, at the OCC, the FDIC, the Consumer Financial Protection Bureau, at the Securities and Exchange Commission, and at FSOC, the Financial Stability Oversight Council. And as we hear from economists and as we hear from market participants, this is generally the picture that we see. Continued strong growth, but several headwinds, including trade uncertainty, slowdown in the global growth picture, monetary policy uncertainty, although I do give Chair Powell credit for communicating better with us. We are seeing an inverted yield curve, which is typically a harbinger of recession. Workforce labor supply challenges that I will touch on later. Deficient infrastructure, and frankly, uncertainty about these proposals in Congress and among presidential candidates about single-payer health care, a Green New Deal, and other policy proposals that would move the United States towards socialism and central planning and away from free enterprise. And I do think that is clouding the picture a little bit. But here's where we stand. 3% growth in 2018. That was the strongest growth since before the recession. 3.1% growth in the first quarter. So all told, very, very good. Robust jobs market. The unemployment rate is still 3.6%. That's a 50-year low and the 15th straight month of unemployment at or below 4%. May, of course, was a disappointing jobs report, only 75,000 jobs added. That's sharply lower than the 212,000 that we had been averaging this year, January to April. But 5.5 million jobs total have been added since this president took office, including over 500,000 approximately new manufacturing jobs. And that's important, obviously, to central Kentucky as a manufacturing hub. A broader measure of labor market health that encompasses discouraged workers and the underemployed is something to note. This is sometimes called the real unemployment rate, and that fell further in May from 7.3% to 7.1%. That's the lowest reading since December 2000. And we've got some good positive numbers in the internal figures. So 3.2% unemployment rate for adult women, that's near a 65-year low. 4.2% for Hispanic American unemployment, that's the lowest ever. Historically low unemployment for African Americans, and record low unemployment for workers without bachelor degrees in May. So again, the labor market is still holding very, very strong. And the positive result of that is strong wage growth. Wages were up 3.1% on the year in May, with employers competing for fewer and fewer workers as the economy grows. In May, workers had their 10th straight month of year-over-year wage growth of at least 3%, providing further evidence of labor market health. Still, we are not expecting wage growth acceleration unless hiring picks back up to the average growth we saw last year and earlier this year. Capital expenditures are up, but checked by trade uncertainty, and tax cuts did spur capital spending, which increases productivity, which in turn increases real growth and asset prices, which means companies can pay people more. But the trade uncertainty is blunting some of the supply-side impacts of tax cuts because companies are less certain about supply chains, and that does, in fact, check some of the CapEx, some of the capital expenditures and investments that we have been seeing as a result of tax cuts. Monetary policy, although I no longer sit on that committee, we're watching that closely. The normalization that happened last year was needed, but Fed Chairman Powell called me in January of this year following the financial market volatility of December, and he explained to me, and I do appreciate this because we had been critical of the Fed for the lack of clear communications with Congress and the public. He called to explain why the Fed was going to pause on its interest rate rises and start this wait-and-see approach that they're pursuing right now. He explained that they were going to end their balance sheet reduction program a little bit earlier. They were going to stop their rate increases. And one of the reasons why he said that they were was because of this cloudy global international growth picture, because of uncertainty with things like Brexit and the trade negotiations that are going on. And also, what's also very interesting and a little bit paradoxical about the relative health of the labor market is low inflation. And that was what animated the decision to pause on interest rates increasing and pause the tightening policies. What we see in that is reflected in lower mortgage rates, lower oil prices, and low inflation. And low inflation is probably the most prominent in the Fed's decision to freeze monetary policy. If you strip out the food and energy prices in the inflation number, it's about 1.6%, which is below the Fed's 2% target. So I would expect 2% growth for 2019 unless trade uncertainty is resolved favorably, in which case we could see another 3% or even 4% burst. If we got a big breakthrough on USMCA, we didn't see any more threats on Mexican tariffs, if we were able to move to resolve the 232 battles with the EU, get a deal with Japan, and encircle China to move toward a better situation there. If we did see a breakthrough on trade, you could see 3 to 4% growth going forward, and we could prolong this expansionary run. On the other hand, if a protracted trade war is in the offing, that would be deflationary. That would dampen growth. And if the tariff proposal on Mexico resurfaces, or if wrong-headed auto tariffs were to go into effect, and if House Democrats deny the President a vote on USMCA, which is possible, and if there's no breakthrough at the G20 later this month with President Trump and President Xi Jinping, then you could see a Fed rate cut as early as July or the fall. This would be unfortunate, in my view, because the Fed should not be focused on correcting policy mistakes. It should be focused on price stability. Still, a growth slowdown and persistent low inflation and a trade war would probably justify a rate cut. But all of this should be considered in context. Americans are far better off today than they have been for a long time, and they're certainly better off than they were 3-4 years ago. And a breakthrough on trade that would resolve uncertainty, lower tariffs and non-tariff trade barriers, and increase access to export markets, all of that would certainly be a boost to the current expansion. So I want to talk more about trade, but before I do, I want to give you an update on the work of our committee. Very briefly, we are implementing S-2155, the legislation that provide regulatory relief to our community financial institutions. I'm heartened to hear positive stories from Main Street lenders about how this is creating better access to credit and affordable credit. And I love the story about not just the portfolio lending bill that was a bill that I authored with the support of the Kentucky Credit Unions and the Kentucky Bankers Association for responsible, flexible mortgage lending. But I love what the manufactured housing industry is telling us about one of the bills that I authored that got into this legislation, because it talks about low and moderate income constituents of mine and how this bill is actually tangibly helping them, in rural Kentucky especially. Manufactured housing sellers who were used under the Dodd-Frank framework were characterized as mortgage originators. They were no longer, under that regime, able to really help and counsel some of our rural individuals who were looking for first-time home ownership in manufactured housing. And now, because of our work, now that they're no longer classified as mortgage originators, they can help arrange financing. They can help provide advice and guidance for low-income Americans who are now able to access manufactured housing and able to achieve the American dream of home ownership. And in some cases, and this is what I love about this reform, they are paying less on a monthly basis for a mortgage when they're building up not only credit, but they're building up equity in a home that they own versus the rent payment that they paid every month. So this is a very positive development, and this is why we're very proud of the work that we did on Dodd-Frank reform. We just passed out of committee this week flood insurance reauthorization. The realtors and the home builders, I think, need that certainty, and we need to protect the taxpayers. This makes some very modest improvements in that regard. We passed a Bank Secrecy Act update earlier this month. There was a bill that I had some concerns with on beneficial ownership earlier this week, but that's moving forward. Again, this is just modernizing the way in which we monitor money laundering activities in the banking system. And final point I want to make that is of interest to a lot of people in this room is hemp banking. Although we descheduled industrial hemp in the Farm Bill, and I was part of that to give our farmers, especially our former Burley tobacco farmers, some opportunities in this space, and there is tremendous opportunity, I believe. We're still seeing, even though we descheduled industrial hemp, low THC cannabis in the bill, we're still seeing some difficulties with hemp farmers and CBD businesses accessing the financial system. In particular, we're seeing the CBD businesses being cut off and choked out of credit card or debit card processing services. We've investigated this, and one of the reasons why, and by the way, when the bank regulators were in front of us, the Fed, the OCC, and the FDIC, I pressed them on this because we have legalized industrial hemp. It's legal under federal and state law. There shouldn't be a problem. But when pressed, what the institutions and the card processors are telling us is that because marijuana is still illegal at the federal level, they cannot distinguish between CBD derived from legal industrial hemp and CBD derived from illicit marijuana. So there is a bill that my Democrat colleague and friend Ed Perlmutter is moving through our committee and through the House, and it's a marijuana banking bill. I voted against it in committee because my hemp amendment was not approved. But I'm working with Ed as we move to the House, and I've talked to Senator Paul and Senator McConnell about this. If we get a rider on this bill that helps deal with the card processing issues for my hemp industry here that I represent, I'm going to be voting in favor of that bill, and I'm working with the Fraternal Order of Police to address some of their concerns as well. We also want to include the Farm Credit Administration, who has requested to be part of this to have access to lending for our hemp farmers as well. And then we would codify those FinCEN guidelines to make sure that we give our law enforcement officials the confidence that they need to know that the banking system is not being create more vulnerabilities in the banking system. On oversight, we've had several hearings on CDBG reform, on discrimination in auto lending and auto insurance, on leverage lending, which some believe is I think a bigger problem than I do, and then student loan servicing. We have this kind of misdirected blame of the student loan servicing business when in fact it's the government, when they took over the student loan business back in 2010, that's created this debt crisis for so many of our students right now. And then finally, and I don't want to spend a lot of time on this, but it is a preoccupation of the chairman of our committee. Maxine Waters has issued subpoenas to 9 banks with connections to the president, including Deutsche Bank and Capital One. And the subpoenas to Deutsche Bank and Capital One are now the subject of litigation. And what is covered in these subpoenas? Well, they cover all, I mean all, you should see this subpoena, all banking and financial records of President Trump and members of his family. They encompass details about every moment of their lives, it seems, including every purchase made, check written, cash withdrawal, and paycheck. In some cases, the subpoenas cover 10 years of records, and in others, there's no time frame provided, and relevant documents could date back several decades, well before the president came into office in a public capacity. So we'll be monitoring that in our oversight subcommittee as well. But at this point, it's in litigation. While the judge has ordered compliance with the subpoena, he's also encouraged the parties to go back and narrow the scope of the subpoena to what is actually relevant to the congressional inquiry. On trade. In thinking of trade, I always begin my assessment of this policy area in recognition of the following principle: that American consumers benefit from free trade through more choices and affordable goods, an improved standard of living and global innovation, and that tariffs on imported goods are a tax on American consumers and businesses. It is no surprise to any of you here who have been following my campaigns and my service that I am an ally of this president and this administration. But every time that I interact with the administration, I share my strong views on that point. And I'm always mindful of Milton Friedman's admonition in his famous book, Capitalism and Freedom, when he wrote that interferences with international trade may appear innocuous. They can get the support of people who are otherwise apprehensive of interference by government into economic affairs. Many a businessman even regards them as part of the American way of life. Yet there are few interferences which are capable of spreading so far and ultimately being so destructive of free enterprise. There is much experience to suggest the most effective way to convert a market economy into authoritarian economic society is to start by imposing direct controls on foreign exchange. This one step leads inevitably to the rationing of imports, to control over domestic production that uses imported products or that produces substitutes for imports, and so on in a never-ending spiral. So my hope is that the president's policies will ultimately indeed lead to more free, fair, and reciprocal trade. And that is a good objective. and that today's threat of tariffs will, in the long run, lead to fewer tariffs, more exports, and more international exchange. And in the case of the USMCA, the President has kept his promise to deliver a modern and rebalanced trade agreement to replace NAFTA. The USMCA, the United States-Mexico-Canada Agreement, along with the President's decision, wise decision, to lift the 232 aluminum and steel tariffs on Canada and Mexico, these decisions and the agreement are a big win for America's farmers, ranchers, businesses, and workers. And why is this so important? Because according to the Congressional Research Service in 2017, Canada was the leading market for U.S. goods exports, while Mexico was ranked second. The two countries accounted for 34% of total U.S. exports and 35% of U.S. imports. Trade with Canada and Mexico supports 12 million U.S. jobs. In every state in the Union, and in every state except for one state, Canada and Mexico are one of their top 3 export markets. So the USMCA, while imperfect, it will recommit our North American trading partners to reciprocal free trade with the United States, and it provides important and beneficial updates to NAFTA. It addresses long-standing trade imbalances by granting American businesses greater freedom to sell their goods and services throughout North America. Not only does the agreement keep most tariffs between the 3 countries at 0, it also does more than any other agreement to eliminate non-tariff barriers and unfair subsidies. According to the U.S. International Trade Commission, implementing USMCA would generate 176,000 additional jobs, and it would grow the American economy by over $68 billion. It's estimated to generate $34 billion in new automotive manufacturing investments and 76,000 automotive industry jobs for the United States in 5 years. And this is why Toyota is so supportive of the USMCA. And I would argue that the distillers in the ag sector is also very supportive of the USMCA. There's some structural changes that this agreement makes to NAFTA, which modernizes and protects American intellectual property, 10 years of data protection for ag chemicals, pharmaceuticals, and biologics, so it's protecting U.S. innovators. There's a new digital chapter that enables data to be transferred across border, and that's good for financial services as well. It facilitates digital transactions. It would expand markets in Canada for American dairy, poultry, eggs, and alcohol for our bourbon industry. It contains 0 tariffs on automotive imports with increased rules of origins, and that will result in 75% North American content for new automobiles and light trucks. So every day of delay that Congress doesn't get to this important issue on the agenda, that hurts U.S. jobs. It hurts American jobs. It compromises made in America products and our opportunity to sell those overseas to customers in Mexico and Canada. So my view is that Congress needs to get to work here. I'm encouraging my colleagues to swiftly approve the USMCA under existing trade promotion authority. I would say there's 2 major remaining hurdles. This wrong-headed idea to put tariffs on Mexico, which if it resurfaces could set us back on USMCA approval. And finally, the decision ultimately is going to be in Speaker Pelosi's lap on this. And they're going to have to make a decision. Obviously, there are some, on the merits, some concerns that some of our Democrat colleagues have on some labor provisions, but if they can iron those out, ultimately the decision is going to be on whether or not Speaker Pelosi wants to give the President a win, so to speak. And I think some of my Democrat colleagues don't want to do that, and they're seeing it in that context. I have argued with several of my Democrat colleagues that they shouldn't look at it that way. This should not be a political issue. After all, this is going to benefit all Americans, especially workers and including unionized workers. They should want this. And frankly, if you want to just make the raw political argument, I would say to my Democratic friends, approve USMCA and make it an exception to the President's tariff policy. And show that we can move forward with free trade in a bipartisan way. Let me just say one quick thing about the Mexico situation. I don't want to get into immigration unless you want to ask a question about it, but this is a real crisis. I just wanted to urge the administration to not focus on trying to solve the immigration crisis through tariffs. because all this is going to do is disrupt our supply chain. It is going to obviously hurt our ability to get the USMCA passed. And the final thing is it frankly distracts attention away from the barriers, the political barriers in the majority, the Democrat majority House. So that's my counsel to the administration to try to get them away from Mexico tariffs that I know our friends at Toyota are really concerned about. Final point on trade, and that's China. Momentum, if we get USMCA, certainly we can shift to the EU and Japan and get free trade agreements there. But China is a special case. And I actually just brought this book because I want you to read this. If you get a chance, read this book. It's called The 100-Year Marathon, China's Secret Strategy to Replace America as the Global Superpower. It was written by a guy named Michael Pillsbury. He's the director of the Center for Chinese Study at the Hudson Institute. He served in 8 presidential administrations, worked for the Defense Department, the CIA, the State Department on China. And his book reveals China's strategy to supplant the United States as the world's dominant power and to do so by 2049, the 100th anniversary of the founding of the People's Republic. It is a wake-up call about how we have misread the greatest national security challenge of the 21st century. The contours of the deal that they were negotiating earlier this year were very good. It was the first time there had been a direct agreement between President Xi and President Trump. It included important commitments on specific products like ag and LNG and automotive exports. There was a commitment of additional purchases of U.S. exports by about $1.2 billion. It's a big deal for the bourbon industry because China has a growing middle class, and American spirits exported to China grew by 1,200% from 2001 to 2017. But the preliminary agreement, even more importantly, had important structural reforms that eliminate non-tariff barriers like theft of intellectual property, forced transfer of technology through joint ventures, cyber espionage, the industrial espionage that Pillsbury writes about in here, subsidies of state-owned enterprises. And we need an enforceable deal. And this would add to the work that we did with CFIUS, which is the Committee on Foreign Investment in the United States and the jurisdiction of my subcommittee last Congress, that would stop malign Chinese investment in the United States. So again, I think the key with China is they are a special case because they don't play by the rules of the international system. They're a mercantilist communist regime. And in this book, Pillsbury talks about the strategy that they've employed over the last several decades, and it's a strategy of deceit and deception. And so it's no surprise that we get all these agreements built up, and at the last minute they pull the rug out from under us, and they see that in the ways of Sun Tzu. They see that as a way to induce complacency among their adversaries. They want to avoid alerting their opposition, their opponents, and they want to manipulate. And they want to be patient in order to surprise and achieve victory. And they steal opponents' ideas and technology for strategic purposes. This is all outlined in the hardliners' strategy. So how do we deal with China? I think the answer is encirclement. The way we deal with China is we work not alone, but we achieve these bilateral, multilateral trade deals to create greater leverage, to open up more free trade zones in the Pacific and in Europe and North America so that we have greater leverage when we want to get these enforceable deals to prevent the forced transfer of technology and China ripping off the American people and not playing by the rules. Let me just touch, I know we're running out of time, but let me just say one thing about infrastructure really quickly. I believe this is vitally important to extending our expansion as well. The FAST Act, our last major surface transportation bill, it's expiring. We need to do more, though, than just fill the trust fund deficit. Maintenance spending has increased, but there's been little investment in the future. And the President is a builder. He has said he wants to do this. These are the channels of commerce. The American Society of Civil Engineers has given our infrastructure the grade of a D+. There's a $2 trillion deficit in infrastructure over the next 10 years. And the estimated cost to the average household in America with a degrading and deficient infrastructure system is $3,400 per household. So when we talk about how do we finance infrastructure, think of it in those contexts, in terms of increased maintenance cost of your vehicle because of potholes and because of other inefficiencies. We need to do this for the public health and safety. We need more safety in our roads and our bridges. There's 53% of highway fatalities as a result of the condition of the road. Economic growth is a big part of this. There are freight bottlenecks. Trucking loses $74 billion just sitting in gridlock. 1.2 billion lost hours, or 425,000 truck drivers sitting idle for an entire year. We are in a different world than when the current infrastructure was built. That was the 1950s and the 60s. We need an infrastructure for the 21st century, and to do this, bipartisanship is required. We have not updated the gas tax since 1993. I am an anti-tax conservative, but I'm part of a bipartisan working group that says, look, I'm willing to look at these things. I'm look at if we know that it's dedicated to infrastructure, but only if we make this bipartisan and only if we're looking at other ways to finance it, including P3. As a member of the Financial Services Committee, I can tell you, the private sector and the financial capitals, and I'm talking not just about hedge funds and banks and private equity, I'm talking about pension funds. By the way, pensions of workers, construction workers and the union trades, they want to invest in their own products. Insurance companies with long-dated liabilities, they want to invest in public-private partnerships. We need to leverage whatever additional public investment with the private capital that could be deployed in addition to state and local. And we have build grants that will not get funded unless we do this. In Madison County, in Bourbon, and in Scott County, we've got lots of projects. In Lexington, Mayor, I know you have a lot of projects, and we want to get you all build grants. But we can't do it without a heroic investment, and that means we've got to be innovative along with just looking at other gas tax reforms and things like that, which means we need workers. I'll conclude with this, and I can take questions on the Veterans Affairs Committee, but with the American Worker Task Force that we're leading, this is a really big deal, because if there's one thing that's holding back productivity in our economy outside of the trade uncertainty, it is the fact that every employer in this room and around the 6th District has told me, like my colleagues around the country, I can't find workers. That is a big deal. Part of it has to do with the opioid crisis, 72,000 of our fellow citizens who are dying of overdoses every year. I had an amendment on the House floor that was passed in a bipartisan way this week that's going to increase funding for addiction recovery, which is desperately needed. But David Boggs and others who do good work with second chance employees, we need to work on that. But we also, if you talk about this construction industry and investment in building and investment in the skilled trades, we need community and technical colleges. We need to invest in community and technical colleges and BCTC. And match those skills and those curricula with the in-demand jobs that our employers have. And so one of the recommendations we're going to have from this task force is we're all good with the DOL certified apprenticeships. We're fine with that. But we want the businesses, the employers that know what jobs are actually needed, we want them to be able to design their own training programs and have federal funds available to them as well. These are called industry-driven curricula or industry-driven apprenticeships. And we want to promote that. We want to promote second chance employees. Obviously, the guest worker reform is important to that as well. And we will continue to look at ways to empower people through welfare reform so that we're not paying people to not work, who are able-bodied and work-capable and don't have dependents. That's going to be kind of the theme coming out of the American Worker Task Force, because if there's one thing that the Fed chairman says to us in terms of what's holding back our economy and productivity, it's the fact that we have labor supply shortages, and that's holding back, that is holding back productivity. And I'm going to conclude there, but let me just say on Flag Day once again, I'll conclude the same way I started in referencing our veterans. It is an honor of my service in Congress to get to serve on this Veterans Affairs Committee. The VA is undergoing a transformation like we've never seen in its history as an institution. We got a great VA here in Lexington, out at Leestown Drive and at UK. Terrific. They're doing great work out there relative to what we've seen in terms of the scandals around the country. But we need to reform the VA, and I'm so excited that we get to sit on this committee at a time where we're overseeing this major transformation of the VA under the VA Mission Act, which went into effect on June 6, 2019. The 75th anniversary of D-Day, 1 year after President Trump signed it into law. This is finally going to give our veterans, particularly those in rural areas, those who are on waiting lists, the opportunity to access non-VA care if they're waiting too long or if they're remote distances far away from the VA, and get those providers paid so that they can get the health care that they deserve. We're taking a big, intensive look at this catastrophe of 20 suicides a day among our veterans. And we're looking at workforce development and marrying our interest and passion for our veterans that we all have and the deficient labor supply challenges that we have in our economy. And a freshman Democrat colleague of mine on the committee, he and I introduced a bill that's going to mark up, it's going to the floor, it's already been marked up out of our committee, that's going to create a scholarship for STEM education as part of the GI Bill. Because we know these veterans are the best potential workers that employers could have. And we have a deficiency of STEM-educated people, and there's no better person for an employer than someone who's demonstrated commitment to a cause greater than themselves and a commitment to teamwork and the ability to work in a team, someone who knows how to follow orders. These are our veterans, and this is a great way that we can really serve them and also serve our economy. So great to be with you. Sorry if I went a little long, but I would like to answer any questions if any of you have anything that I didn't touch on. Thank you.
Okay. Andy and I think Angela are going to have the mic. They're going to move it around. Be thinking about questions. I'll start off. So what we hear typically about what's going on in Washington, D.C. is through the lens of media, conservative,
Right.
liberal, all the above. From your standpoint, what's kind of the talk? What's kind of the mood? We got all kinds of issues, global, domestic, local. So what's kind of the mood of everybody, Republican, Democrat, and those of you that do work together?
You know, I think the mood is mixed, to be candid. Obviously, you all see the news media and how polarized our politics are today and how difficult that is. And to be sure, these investigations are creating some partisanship in Washington. I do like to stress, though, especially when I'm visiting with my constituents, that it's not all partisan. It's not, it really, in fact, this week was a great example of that. You know, we had a bipartisan working group meeting that was very productive. I co-chair, I've been part of this, but I haven't been like in the leadership of it. I was invited to join by some senior members back when I was a first, second term, and now those guys have kind of moved on, and it's 10 Republicans and 10 Democrats, and I co-lead that with Derek Kilmer. He's my classmate. He's from Washington State. He's a great guy, very, very smart, well-educated guy, but he has the right kind of, I hope he would say this about me too, he has the right kind of temperament to be kind of a results-oriented legislator. He recognizes that to get things done, we're going to have to work together. And he would also describe himself as a liberal Democrat. And I would describe myself as a conservative Republican. But we have a great personal rapport, and we listen to each other, and we've included people who are really across the political spectrum. We don't just get moderates in a room, and we don't say you have to compromise your principles. What we do is we get a broad cross-section of the whole Congress who have the same temperament, and we listen to each other, and we figure out ways where we can have, not necessarily compromise for compromise sake, but overlapping interests that surprise us when we actually listen to one another. And we're finding some of those in the infrastructure space, and we're actually writing a letter right now together to our respective leadership and to the chairman of the Transportation Committee and the ranking member to see if we can spur from the grassroots some kind of movement on transportation. So the answer to the question is there's plenty of examples of bipartisanship that is underreported or not reported in the media, and I think that should give all of you all some encouragement.
This could be a record. All right.
Hey, thank you very much. Appreciate it.